Welcome. Remember to hit the like button for the new stream. We've got a good amount of likes already going, 44, 60 seconds in. That might be record breaking. And if you haven't yet subscribed to the channel, we're live here all the time. Usually when it's more exciting, but sometimes we go live when it's really boring too. So that's what we're doing today. Get some tunes on. A little bit of knife territory. What we are seeing, thankfully, on the daily. Well, we don't see signs of weakness yet, weakness in selling. What we do see is these daily candles are getting smaller. With 3.5 hours to go today, currently we are looking at the smallest red candle in the last 4. This can be taken as a sign of exhaustion. Typically, when we see candles expanding in size to the upside or downside, we look for continuation. And when they begin contracting, that can suggest that the swing may be running out of fuel. Currently sitting on the 100 daily moving average after rejecting from the 50. Not ideal, but is this something we've never seen before? The answer is yes, we have seen this before. The previous bull cycle is really our guide here. It has not lined up in the way that maybe we would feel more comfortable with, but we do see the 100 daily tested over and over again on the way up to the 2017 peak of 20K. And we see that here. 1, 2, really multiple times. In fact, pretty normal. Pretty normal to hit this level. And if you look at this previous run, you see that we've actually closed below, found it as resistance before rallying back on top. We also see some nice clean closes on top of it afterwards. And then really, rest of the cycle, we don't touch it until we are unknowingly back in the bear market. So where are we now? Good question. Hey, I was doing this for the patrons yesterday, man. We've had a lot of patron time lately. Just hanging out, keeping each other company while we weather through this downside. Let's take a look. We've done this a million times, but why not do it a 1,000,001? January. Keep referring to January. From the high of 42 to the low of 29, we had a 31% retracement. 31%. February, we saw a 26.3% retracement. Today, can anyone guess where we are? Virtually the exact same. Exact same as February. 26.3 versus 26.8. That's close enough to call it the exact same number. That's a double bottom of retracement. Looking over at January, we see 31.5. Now that is significantly larger than what we've seen today, what we've seen this month. Something interesting, I think, that we also want to look at here quick is the timing of these sell-offs, these bottoms. Let's just pretend it's the 23rd for now. Is the bottom? We don't know. If you look at these dates, January 22nd, but I think we could argue even January 27th, February 28th, March 25th, April 23rd, potentially 25th, we don't know. Anything ring a bell there? Anything seem a little sus about those numbers? If you're thinking right now, oh hey, those are all roughly the exact same day in the month, you'd be correct. You'd be very correct. It seems as if the 22nd through 25th, that kind of area in the monthly, well, every month this year has been the swing low. Actually, I didn't look at it for December, single month, the end of the month. And then look, almost as soon as the new month starts, the green candles come out to play. Remember that in March, long string of green candles. April, we had some. February, that was the one that really brought the gas. So retracements are similar. Timing is similar. This just almost seems too choreographed, doesn't it? It's like maybe too easy. So what I started with here was January's retracement, 31%. So it does seem like all of crypto Twitter, all of crypto tube, just everybody is looking at the same number. That number is sitting on the 20 weekly, 21 EMA weekly. Some other interesting coincidences here is if we look at January's retracement, we apply it to here at just about 64, 65. and we look for a 31.5% retracement, where does that number land us? Well, conveniently right at that number that everyone is looking at, roughly 44,000. That's spooky. Not spooky in a threatening sense, but spooky in a, man, this all seems so choreographed. Let's look at the weekly here as well. We'll leave that price value there. I don't even know if I have these moving averages. We will find out. There's the 20. Turn the labels on. The 20 sitting at 44. That's 1% away from our 44.5. If we are, in fact, going to test those levels, maybe the 20 moving average is sitting at 44.5 by then. That really wouldn't even be hard to believe. We're going to add our EMA because for whatever reason, this thing does not like to keep my EMAs. And we'll put it on 21. And what do we find? 44.2. So we have 44,000 on the 20, 44.2 on the 21 EMA. And then we have the same retrace as January sitting at 44.5. These all are pointing to the same number. Usually, put it this way, guys, if nobody was looking at these numbers, if everyone was talking about 30K or 25K or some other number, 44,000 would be almost a certainty. If no one was looking at it, if everyone had different numbers. However, if you guys have been paying attention to any YouTuber, I would guess, Twitter posts, polls, you will see that almost 70% or more of people are looking for this same number. 70% or more. In my crypto experience, there's just really no way 70% of people can be right. I don't have really a rational reason to tell you why. Just through observation, I'm not sure if I've ever seen that happen. So, what is the move here? What is the move? I guess the move would be, if you see 44, that might not be a bad place to add. If you're looking to increase your portfolio, your holdings, people are always looking for the dip. They're always looking for cheaper coins to buy, lower their cost average, etc. There you go. There you go. Now, does that mean sell everything and try to buy back there? Well, let's think of it this way. You have a 13% from right now, this second, 13% downside to there. That is a potential 13% gain if you do it perfectly. And assuming price actually makes it there. So what's the upside potential? What's the, I guess, the risk here? Well, this number can go up pretty high. Certainly, I think in this bull run, 100K is not a crazy concept. It's not moon talk. That's just a 2x from here. That's 96% gain. So you're risking a 96% gain, hoping that you'll squeeze out a 13% gain. That risk to reward, that's not really good. That's really not good. In fact, let's put a short position thing here. Let's see exactly what it is. You guys might not be able to see this. I'm not sure how clear it is. That is a 0.14 risk to reward. 0.14. That is terrible. This is a terrible risk to reward. Of course, this is all my opinion, not financial advice. If you feel that you need to sell here because the number went down, I mean, go for it. I'm not going to stop you. I'm not selling a freaking Satoshi at this price. I don't think it's a good risk to reward. 0.14. You would need such a high confidence to take that. Even if you didn't do it to if you didn't do it to like 100K. If you just did it back to the high. You just did it back to 65. It's still 0.5. Half a 0.5 risk to reward is just garbage. Just garbage trade. Typically, we look for things that are 2 to 1 or 3 to 1. As even having a 50-50 on a trade can be difficult at times. You definitely aren't looking for 0.14 or 0.5. Those are terrible numbers. Man, oh man. Loading the boat. What's up, Hodl Crypto? Jamie Walkerdine. Ichimoku Cloud says we're going to go down again. Ichimoku Cloud doesn't really tell you that we're going to go down or not. We can look at it, but it's not really an indicator that says up or down like that. The daily, the cloud is still green. It's untwisted. If anything, in my opinion, Ichimoku Cloud is saying price needs to come back to here. Here's the warning, though. Here's what I'll warn everyone about. This would be not good. If we return to where the Ichimoku Cloud is suggesting and we reject, that's when it can get very ugly very fast. Very ugly very fast. I assume if we look at our moving averages, we're going to find something is in that range as well. The 50, yep, there it is. The 50, the 20, and Ichimoku's TKKJ lines all lining up, all suggesting the same price. So I'm going to disagree with that comment. I'm going to say the Ichimoku Cloud is actually suggesting up. However, that upside target's a little freaky. It's a little freaky of a target. If you see these lines right here, I'm going to make a box to make it easier to see at home. Here we go. These are all concentrated in a very tight price range. 55.5 up to the 20 is 57.7. That is extremely small. I have no idea what just happened. I was trying to make a rectangle. What is actually happening with this rectangle? There we go. Trading View, you need to stop drinking. Stop drinking, Trading View. This is what it's suggesting. This is what Ichimoku Cloud, this is what moving averages, this is what just kind of analysis of a market, nothing to do with indicators, nothing to do with really anything other than there hasn't been a relief bounce, is all suggesting this range, 55 to 57. That's the issue, though. The issue, really, in my mind, is not will we get there, because I think the probability is extremely high that we will make it into this box. The issue is what happens when we make it to that box. Moving up to here, to that 55, 56, and then breaking this low again, that's what gives you the big downside. That's the big oof. Now, if you test that box, you see a little resistance, maybe you make a higher low at 52.3, then things can look pretty good. They can look pretty good then. But if you lose the cloud, you break your low, and the low's down here, break your low, man, then you get set up for the awfuls, the really bads. Let's do a hypothetical fib retracement here. We'll say, we'll take it to the 50. Get rid of this too. We use our fib retracement tool and look for a measured move to the downside. Assuming that's where we go to. These numbers get not hot, man. The 1618 sitting at 42. That's not really out of people's expectations, but the 2 measured move down at 39.8. These numbers do not get good looking quickly. That is really what I am eyeing. Not that I think that's what's going to happen necessarily. Though it is possible. What we're going to look for is what happens to price action at 55, 56, 57. To see Bitcoin just sell from here, I know a lot of you guys are looking for that 20 and 21, but to see Bitcoin do this down to that level would be absurd. It would be absurd. I've never seen anything like that, ever. That doesn't... in the sense of, I don't believe that's probable, because that doesn't really tend to be how markets move. Now, if we want to look at, hey, what does this price action look like? What can we compare this to that I'm familiar with, because the world revolves around me? Haha. I would say look over to February. Let's get rid of all these indicators so you guys can see something. There we go. Don't need this. There we are, February. This looks a lot like what we're doing now, doesn't it? There's really no relief bounce. There is down, sideways down with lower lows. That's what we saw. Down, sideways down, lower lows. And here is that bounce that I'm talking about. This is the 55 to 57 bounce right here that I'm looking for. Yes, it did get rejected, but we got, luckily, that higher low. That's what we're going to hope for. And then we can move to higher highs. Looking for a repeat of really this whole price action area. This actually is a great example, because this really highlights what I'm talking about. To the T. I don't know if the retracement is exact. Pretty good. 0.5 to the 0.618 right there. There it is. Let's do that. Boom. Let's actually, I don't even know where this is now because I keep having to change it. There it is. All right. I mean, is that even like How can I even doubt this now? It's the exact same freaking retracement too. Wild. This one was fit, and this one just so happened to be the same price range. This is like hard to deny at this point. Yeah. Oh, I just made myself feel better. I just made myself a little nicer. I'll feel a little nicer about this. This is the exact move. That's freaky. Literally did not plan this. Just like discovered this while doing this right now. How similar these are. I did notice a similarity in February to this sell-off, but I didn't, in my wildest dreams, assume that, well, the price target that we'd be looking for is going to be the exact same retracement also as February. These things are just too similar. You know what we're going to do? Because I know you guys love these. We're going to take a look at these bar patterns. How would this bar pattern fit in here? If this fits, I'm going to lose it. That fits, God, perfectly. Oh, all right. Well, we just found the future. You guys retire the crystal balls. We found it. Wow. That's way too good. Whoa. Look at this. I don't even know what to say at this point. That's like the perfect fit. You get the rejection from the 618, hit the higher low, and then you move up. Will it play out exactly like this? Probably not. But holy crap, how many things? How many things are exactly... Things aren't usually this neat. That's freaking me out. 662 watching. What is up, guys? Oh, welcome back. Almost 700. Great to have you guys. You guys are missing some of the best freaking tea on YouTube. This is a non-emergency alert, and wow, are we getting into it. Highly recommend everybody rewind if you missed this, because this was some gold. This is some gold, man. This is what we do here, guys. This is every day. Every day we're live. We're not sitting here regurgitating what other channels are saying. We're not, I don't know, freaking you out. Oh, it's going up, it's going down. No, we're just gonna look at the chart. We're gonna see what the chart says. That's it. If you like that, if you like this kind of content, go ahead, hit that like button, hit the subscribe button, slap the bell. We have 170 likes, 700 watching. I think we can get that up to like 300. The more people who hit the like button and subscribe during the live, the more visibility, the more priority YouTube will give the stream. That means the more people find us. That'd be a good thing. Also, make sure to join our Discord. YouTube constantly shadow banning us. I don't know why. They don't like us. The only way that you're going to get notified when we go live is by being in the Discord. It's the only consistent way. Let me finish this shill, and then I'll do a 2-second recap of what we're looking at here for everybody joining us. Also, check out the Patreon, guys. It is our private group, but it is not a private group. It is a learning, educational-based, trading, crypto thing. I don't know. One-on-one crypto mentoring is available. Small group seminar, Q&A, patron nights, trade setups, technical analysis, macro market insights, all kinds of good stuff. Done by me. I put a lot of work into it. A lot of people have gotten a ton of value. We've actually seen our first millionaires. Claps to the first millionaires in our group. So, good stuff. All right, let's recap this in a ELI 5. So what we're looking at here is everyone has a rise on 44 to 42,000 down at the 20 weekly MA and 21 EMA weekly. And we're arguing that maybe that's not what's coming. Too many people are looking at it. It's just not really how Bitcoin tends to work. So what we're looking at here is the likeness between February and April. What is the likeness? Because there's a lot of them. There's a lot of similarities here. So what we saw in February, lots of downside wicks, no significant bounce. You did see we have one green day sandwiched in between 6. This is not a significant recovery bounce. Had this moved up higher, that could have changed it, but it did not. It really was just selling. And then we saw a retracement to the 618. The 0.5 through the 618, that's that green box here. Before setting a higher low. And actually what's interesting here is that higher low is off the 236. Wow, that was a loud motorcycle. That's off the 236, so if this is exactly the same, then this should line up. It lines up perfectly with this bar pattern. I'm getting freaked out. But what we really need to see is that higher low. Higher low here. For us, that would be 51.1 if this plays out the exact same way. So why would we be looking at 55 to 57? That's where our green box is now. That's where I'm looking to see some kind of recovery bounce, some kind of relief. Nothing goes straight up. Nothing goes straight down. Every market moves like this. It is a battle on every time frame between market makers, retail, whatever, battling out each different time frame, and the cumulative result of that is what we see. And for whatever reason, we always look to the 0.5 to 0.618 retracements of any move. So to the upside or downside, we're always looking for the same retracement. Why is that? Well, we've seen through observation that I'm not even going to pretend to put a number on it, but much greater than 50% of the time, we see retracements to this level. To the 0.5, I would say it's probably 75%, if not higher. These are high probability bets. Just no other way to put it. That area lines up right here, 55 to 57 for us. But why else would we be looking here? This actually got sparked. I'm going to have to thank that person. This whole thing, this whole ramble, was actually sparked by someone saying the Ichimoku cloud says we're going down. I disagree. I'm an Ichimoku fan, practicer, avid, Ichimokuist. And I would actually disagree. The Ichimoku cloud, I would say, is not saying that. First piece of evidence, no cloud twist. It is saying the trend has not changed. The winds, as it's described, have not changed. But we look to the TK and KJ. This purple and green lines here. Where are they sitting? 55.5, 56.2. Price rarely moves too far away from these without coming back to test it, regardless of what direction it's going. Like I said, markets don't just move in one direction. They move up and down. Moving too long in one direction typically is going to be when you start looking for the other direction. These lines, I don't know, are magnetic. Price likes to test them. Is there liquidity there? Probably. That's probably part of the reason. Could have to do with leveraged positions, stopping them out, etc. But that's where these lines to me are suggesting price wants to go. Now, there is another piece of information, not Ichimoku cloud related. Moving average related. Our 50 moving average sitting at 56.8. Our 20 at 57.8. All of these indicators we just looked at are looking at the same range. That range just so happens to be right at our 0.5 to 0.618 retrace. The probability of price seeking out these levels, to me, is very good. Does that mean it's all sunshine and roses and we're going to the moon? Sadly not. As I said, markets don't just move in one direction, they move up and down. So what's going to be important is, if this plays out, what happens here? What happens at that 55.5 to 57.7 range? We looked back at February and we said, man, this looks similar. Let's see just how similar it is. That's what we found. Let's look at it quick. Price sold off. It did not have a relief. It had really no relief movement. We have one green candle in between 6. We saw a relief, a bounce. Where did that bounce end up? Almost exactly. I know you can't see it too well there. Almost exactly at the 618. 51.9. 51.9. So overshot by just a little bit. I think that was even the Elon Musk tweet. I think that's when he put hashtag Bitcoin in his Twitter profile. Sold off. Here's the important part. So a sell-off at the 618, is that the end of the world? No. TA is always a study that is evolving. It is going, being dynamic with what you see. Is this the end of the world? No, it's not a good sign, but it's not the end of the world as long as you get a higher low. You can see we did get a higher low off of that Elon candle and sell-off. Where is that higher low? It's at the 236, almost exactly. 46.2, where's this higher low? 46.266, so the exact same number, let's just put it that way. And that was seemingly the catalyst to run. So what would that mean here? We took a bar copy a ghost bar. If you don't know what that is, go to trading view, go to your tools on the left, scroll all the way down to bars, pattern, prediction, and measurement moves. Select bars, pattern. That's what we did. I'm not going to do it again because the first one fit. And what did that give us? Well, it gave us this really creepily accurate. These don't always fit like this. It gave us this creepily accurate bars pattern. I'm going to go ahead and hide this for a second. There it is. This was just thrown on by me. This was not really placed in a kind of specific manner to make this fit. But what we see is the swing low, our recovery bounce. Where does it go? Right back to the 618. Sells off. Where does it go? Right back to the 236. Where is that? That's what's important, I think. Where's the 236? Because that's where we'll be looking for a bounce if 57.7 is defended. 51.1. 51.1. Surprisingly, right where this bar pattern suggests as well. It's almost too much coincidence. Almost too much coincidence. And then we'd be looking for a move to the upside if 51.1 holds. It's pretty interesting. Pretty interesting how accurate that is. 42. 50, or 65.7. I don't know why I said 42. Maybe because it's the answer to everything. Do we have any kind of extension we can use to maybe 272? Okay. 272. So if this follows January's movement exactly, which I believe is unlikely. So we're doing this because it's, I don't know, it's something to do. It's interesting. This is actually really accurate TA. I wouldn't have expected this to fit so well. It's unlikely to play out exactly like this, but if it does, then we would look for an upside target at 68.2. That would be the same measured move from the failed recovery bounce to the higher low to the new high. We can see that here. And we would take that same fib extension to look here. So that's some pretty cool TA. That's some pretty cool TA. Could you trade exactly this? Yeah, it might be possible. I wouldn't recommend blindly trading anything like that. Could you trade it? Sure. But the more useful thing that you can do with this information than blindly trading it, because I really don't think anyone should do that, in my opinion. What you can do with this is you can use this as a guide. That's a lot of what I do in this channel, is we look at the movement, we look at our indicators. Our indicators aren't helping us right now. Everything is just floored. All of our oscillators are just being smashed down to like zero, down to their lowest values. We haven't seen that wane off yet. We could in the next 3 hours. There's no promise. So we have to look at some other different stuff. Our oscillators are not helping us. When you're at a bottom, your oscillators are never going to really be saying, hey, it's time to go up. And at a top, oscillators are never really going to be saying, hey, it's time to go down. They're simply going to be at their lowest or highest levels, depending on if it's a low or a high. They lag. They're going to lag behind. So we can use other things as a guide. We can apply that, and then we can say, hey, this pattern isn't fitting. What would change this pattern? I don't know. A lower low here. If we did sell off then, I don't know, to that 44. I think that's highly improbable, though. I do believe that we see that 55 to 57 range first. If that rejects hard enough, then we can go down. Then we can go test those 20 weeklies. That's totally possible. But we can use this as a guide again, right here. We know that the 236 is where we saw the higher low in February. So if we do move up to 57 and sell back down to 51, we'd expect to hold that. If we don't hold that, then we may say, hey, there's probably low. There's probably lower lows coming. We didn't hold the 236. Pretty interesting. This is not orthodox technical analysis. This is probably half witchcraft, half, I don't know, crystal ball. But the similarities here are freaking wild. Did not plan any of this, guys. This stream was just going to be nothing. Apparently putting not urgent Bitcoin and Ethereum alert attracted a lot of people, though, so that's cool. Right on. Good to have you guys. I should make a standalone video of this today and release it, because this is some good stuff. Even if none of this plays out this way, this is where an analytic mind should be going. It's where an analytic person's thought process should be. What kind of data do I have in front of me? What can I do with this data? How can I use this data, and especially in ways that maybe other people aren't? There we go. We have reason to believe 55 to 57 should happen. It's what happened in February, so why don't we look at February? See if it fits. It fits. This bar pattern's really what spooked me out, though. At first, I was like, yeah, these are all like pretty probable. Pretty probable. As you can see, this is the price movement from February. The fact that it fits so well and even the bars hitting the retracement levels is like creepy to me. Honestly, wouldn't surprise me at all if this is what happens. Wouldn't surprise me. Doesn't guarantee it, but this would be very normal. I wonder what that would really look like then. You know, let's get really into it. If this does happen, if it plays out this way, because what else are we going to do? We can just sit here and debate on knife catching. Should you buy now? Should you buy at 44? I don't know. If it does play out, though, we have a pretty ugly pattern, to be honest. This is not an ideal pattern. That is an ascending channel. They do not typically break up. What I would like to see is instead of 68, I would like to see a higher move. So maybe that means 80s. And then a pullback on top of that channel. Why? This is how you start a parabolic trend. You set a channel, you break above it, you test it as support, and then you move up, and what happens is then you start increasing the angle, the gradient of the channel. What happens? Then you break above it. Then you test the top of that channel. And you keep doing that until you run out of fuel and you fall back through all of it. If you look back at the previous runs, you'll see very similar channel-ish building, breaking above, testing them as support, continuing on, making a new channel, rinse and repeat. So this is some pretty cool stuff. I don't know, what else is there to talk about? So I'm fascinated. I'm a chart nerd. Chart nerds for life. And we almost have 900 watching on a day where, dude, I honestly went live expecting like maybe 200 people to show up. Like 200 people or something. Like really, really low numbers for us. I'm going to save this even. I'm going to save this. That way I can told you so's. But if it doesn't happen, then I won't say anything and pretend like I never thought this would happen. So let's, for the records, let us set this chart up right. So we would look for support here. I'm going to move this over. Move this over to here. And we would look for resistance here. Let's make these nice and thick. Get them thick lines because they're sexier lines. Thick lines. All right, there it is. And then we would be looking for what? It was up here as the target. It's like around there. I don't know. So what we're going to do is we're going to take a picture of this now. I'm going to share it with everybody in the chat. And then if this happens, you guys can tell everyone that is psychic, that know the future. Don't tell them that this whole time, like I'm saying, this is all like fun. This is what we're looking for, but the odds of this actually playing out exactly like this is very low. So there we go. There's the proof. You can show this to your friends if it plays out. Wait till it already plays out. That way we can like say how smart we are, rub it in everyone's faces, something like that. You know what I'm talking about, guys. You know. All right. All right. Nice. Is there anything else going on here? Let's take a look at these coins. I'm going to read the chat in a minute. That was a great rant, man. I just was freestyling and that worked out.